A business standard analysis of 983 listed companies which have declared their results for the first quarter of financial year 2023 has thrown up some interesting numbers. The net profit of these companies in the April to June period jumped by 64.7% year-on-year to a high of 2.68 trillion rupees. While the net profit looks impressive, a look at the sales numbers tell a different story. The combined net sales of all these companies were up just 7.3% year-on-year in the said quarter. This is the lowest growth in the past 10 quarters. And the growth in earnings remained lopsided because most of the incremental gains come from a handful of companies.
Obviously, there are certain sectors that benefited from the post-COVID recovery. Two, from the China plus one kind of a strategy. Two is obviously domestic consumption is also chemicals, pharma, etc. are muted. I would say chemicals largely because China has also recovered post-COVID and China is supplying globally. Metals and commodity prices are also cyclical and sort of had a peak in 21-22. Offtake of credit, of course, is very high. So small finance banks, banks in general, if you see even a company like HDFC Bank is declaring almost a 20-25% increase in credit offtake. So it's varied industries have varied, I would say, outlook.
If you look at the performance of the various sector over the historical data point, it always has been like few factors marginally outperform the other sectors. So that's quite normal to expect for. Even if you compare the same sector performance across the globe in the other emerging countries or other developed countries, the growth always varies for.
Except banking, finance and automotive sector, most other reported a slowdown in top-line growth in the June quarter. In the business standard sample, listed companies added 1.05 trillion rupees to their combined net profit in Q1 FY24, but nearly two-thirds of this growth came from only 5 companies. 3 of these companies are government-owned oil marketing giants, Bharat Petroleum Corporation, Hindustan Petroleum and Indian Oil Corporation. State Bank of India and Tata Motors were 4th and 5th biggest contributors to the overall earnings. Barring these 5 companies, the combined net profit of the rest of the sample companies was up 20.4% year-on-year in Q1 FY24, a slowdown from 23.6% YoY from Q1 FY23. But if we remove the automotive companies from the sample, this net profit growth falls to just 7.3%. Meanwhile, there has been a divergence between yearly and quarterly growth of the companies. The Q1 FY24 net profit of India Inc. remained nearly stagnant as compared to the previous Q4 FY23. The first quarter net profit stood at 2,67,460.9 crore rupees as compared to the 2,66,607.2 crore rupees last quarter, a mere 0.32% increase. So, what does this gap between the year-on-year performance and quarter-on-quarter performance indicate?
Definitely, year on year, if you go back 1 year ago, 2022, I think we were just coming out of COVID. 2021 was brutal as far as COVID is concerned. So 21-22 as a financial year would have been fairly muted. So 22-23 definitely is a huge increase compared to the lower base of 21-22. But quarter on quarter now, of course, it's fairly muted. Growth must have tapered off because in 21-22 the base was low, but now of course the growth is sort of matured. In some sectors it may be worthwhile to look at 22-23 results in comparison to 19-20 results pre-COVID.
Moreover, despite signs of economic recovery, collections from the corporate tax declined nearly 14% year-on-year to 1.38 trillion rupees from 1.61 trillion rupees last year. So the question arises that when Q1 profits have surged 65% YoY, why have corporate tax earnings of the government declined in the same period?
While the business is showing growth, the collections could have been gone down because there have been certain transactions which have not been liable to TDS. There are certain transactions, particularly the corporate tax rate has gone down, and many of the companies are now opting under the new scheme where it is 22% corporate tax rate plus the surcharge and cesses. So as opposed to what was earlier 25% plus surcharges. A lot of companies are driving the growth by doing a lot of big capital, and they would have planned some more capital investments, higher depreciation they would have planned as a claim. And effectively, their corporate tax collections will go down accordingly. In fact, some of the companies are setting up a new manufacturing entities, units, where the rate of corporate tax is only 15% plus surcharge and cess.
Going forward, as the major global economies stare at slowdown, India too cannot remain unaffected. There are challenges on the domestic front too. While some sectors are doing well, it remains to be seen how the others will tide over the ongoing slowdown.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's about to land his dream job. Business Standard.